We heard this morning a lot about what needs to happen to have a vibrant tech and innovation infrastructure and how critical of a building block that is. So one of the things I rescued from this morning is that this is a collective effort, and it has to be focused on building robust and secure solutions. We're talking about everything from data centers, cloud computing, communication systems, cybersecurity, but also these new layers, including AI, data rights, and all these software parts that are so critical if we want to ensure that this new digital landscape is more inclusive than what we see today in the physical world. We also heard the policy and perspective, which was so rich and so great to hear the Ravi Menon and the governor of the Central Bank of Rwanda. And I love their focus on understanding their role in terms of enabling and being not too far from where the innovators are, in order to ensure that those best innovators can actually reach great levels of adoption and also scale. And how important it is to think about that framework in the context of the whole system, which Anna also pointed out has to include incubators, accelerators, and in essence, drive also together the emergence of collective platforms that the policymakers and the central banks can create in order to reduce the risk of innovation for the general population and for the government as well. So meet the fintechs where they are. I like that. Came up this morning, and let fintechs know what's expected of them. From a policy regulatory standpoint from the beginning. And of course, there was much talk about harmonization and how examples like the API exchange or Proxtera, which Ravi Menon mentioned, are great green shoots and motivators for other policy and regulators around the world to do the same, because at the end it comes from a belief that all of this is not just to make easier or more convenient the use of some financial product or other products. I was recently speaking to a fund that invested in a company in the US called GoPuff. What do? Well, if you are in Miami Beach and you forgot your sun cream, they bring it to you in less than 10 minutes. That's kind of nice, but I think that's not why we're here. We are actually here to invest in companies like the ones that through IDB Lab we were able to invest in a few years ago, Betterfly, which has enabled life insurance of all products. We're not just talking about the lending product, actually life insurance for people who never had it. And it's now the first social unicorn listed in the US. So I think the perspective that we got this morning from the policymakers comes from there, comes from the fact that we know why we're doing it. We are doing it because we can build a more inclusive financial system that will be transformational. This is not just about a bit of ease and convenience. Then we heard a lot about the capital perspective as well, and how to bring in more capital. Clearly, less fragmentation in the continent, and knowing that just like in Latin America and the Caribbean, each country, it's a different world, but still reducing the friction from companies, for companies to go from one market to another. And particularly if you are in a relatively smaller country, will make your addressable market so much bigger and capital to flow into your company so much easier. And we've seen it already in the more than 50 unicorns that have emerged in Latin America and the Caribbean. Hopefully there will be that many more here as well very, very soon. Two of them in the payment space, Kushki in Ecuador, a country of less than 20 million people, and Dilocal in Uruguay, a country of less than 4 million people. And they became their first country unicorns. And so you can do it if there is enough predictability of the rules in the other countries to go cross-border, which was something that in terms of attracting more capital came up very, very clearly earlier. And we also heard about, obviously, not just equity and funding for earlier stages of the companies, but also ability to have predictable capital for follow-ons and also local currency funding. And last but not least, talent. There was much discussion. I was actually very pleasantly surprised by how much focus there was by everybody from the different perspectives, capital regulators, think tanks, operators, on talent, on the talent gap that exists today and the potential to train and right skill and gain that knowledge of tech skills that are also have to be rapidly adapting to the ability for ChatGPT and other forms of tech to take on roles that were very relevant 5 years ago but are now being computerized. And I thought that those bets on the importance of talent and what Elevant is doing with the digital asset and sustainability certification program are amazing steps in that direction. Now, I did want to share with you, as I said at the beginning, a little bit of a perspective of also what comes ahead from a more integral Web3 perspective. And we've heard a little bit about Web3 this morning, and I want to mention just why I wanted to put a focus on it given the discussion. And it is that we are no longer just talking about FinTechs. We're talking about a whole lot of players that are entering this new Web3 economy that allows for both representation of assets like documents, like certifications, etc., and for native digital assets to come into play and be part of what a person or a small farmer somewhere in a rural area can for the first time use as an asset to get financing when before that data, that information was not reliable, was not digital, was not being able to be used almost as a security to be able to access credit. So this is what we're talking about, these two dimensions. We are seeing now, I hear some people still talk about, by 2050 in Africa and in Latin America and the Caribbean, every citizen should have a credit card or access to a bank card. That's kind of past news. Everybody should have a digital wallet, and this is like really at our disposal if we collectively put our minds to it. And on that wallet, you could have all these verifiable credentials and all these real-world tokenized assets, and leapfrog for many people who've been completely invisible in the financial system until now, built on foundations. We talked about digital ID as just not a panacea, but a very, very important component of all this infrastructure. Built on that, you can have all these on-chain and off-chain digital assets that can transform the lives of many, many people. We're talking about a $16.1 trillion opportunity. This is the projected market size of tokenization by 2030. We're seeing how it's what it's made up. It's made of non-financial corporate and quasi-sovereign debt, but also real estate funds, private equity, securities, trade finance. That's what's coming, and we want to make sure, again, that we don't translate the financial gap and the inequality that exists in the financial sector today to this digital dimension. It's possible to include everybody, and this is why I love this forum, because we can do it with the right collaboration. And the right collaboration starts with having the right environment, and policy and regulators like the ones in Rwanda and Singapore, I think are inspirations in that sense. They don't you know, this is a phrase from the closing of Jorge Familiar, the World Bank treasurer, who closed the Asia chapter of the Capital Meets Policy Dialogue a few months ago. And he said this. I was very happy to hear Rabia Meno to say, well, they're always a few steps behind, but don't be too far behind, right? Just observe and be quickly able to catch up, to provide the sandbox, to provide the right elements for innovators to test in a safe environment their new ideas. And of course, this takes us also with the innovations of the central banks themselves. And we're seeing a lot what's happening around the world on CBDCs. Sometimes it's a bit of a distraction because it's a bit far off, and we're still having to build basic things like the digital payment rails. But still, it is happening. Many countries are thinking about it. Few know how to go about it. But there are some, in the case of Latin America and the Caribbean, we've had some examples. But we know that 9 out of 10 central banks are at least exploring. This was absolutely not the case just a year ago. Now, we also know that this is a public-private partnership because you don't build all those layers of infrastructure if you cannot then integrate other uses on top, other solutions on top. We are in the world of tokenized assets. We're in the world of composability, and digital wallets are, as I said earlier, a big part of what's coming. Now, a good example is what we heard also from other parts of the world, how we've seen also already retail payment transform with new forms of instant payment methods, open banking and the CBDC pilot. But I want to focus on the instant payment because it is what is here now. Brazil didn't have it a few years ago. They started looking at a fast payment rail for P2P transactions. At first, of course, all the payment companies and the financial institutions, which are highly concentrated there, are not very happy about this move from the central bank, considered, by the way, the best FinTech in Brazil. So central banks can be innovators too. But with time, and once PIX, this fast instant payment system came to life, and more than 100 million people started using it. Many of which had never had any access to the formal financial system before. The other traditional players realized that the pie just got bigger, and they could build other solutions on top. So I think embracing that and working together to dialogue and to bring together traditional players, new players, it's fundamental for this to succeed. And the success is proven by the fact that this is already becoming a cross-border service. This is all very good, but it has to, of course, come with a lot of responsibility. And responsibility first and foremost in terms of security, in terms of personal data, and as we heard earlier, also data rights. So large implementation of CBDCs or of these retail payment networks, or of, for sure, also the cross-border aspect of it, it's still far off, but it's but we know the path, and I think this forum is amazing in terms of motivating different regulators to look at what's happening elsewhere in the world and say, you know, I want to catch up to it. And the best news is that the most advanced regulators and innovators in these different parts of the world are very open to open source, and they're willing to share what's happening with others. And this is also what we're doing from IDB Lab as the innovation and venture arm of the development finance institution that serves Latin America and the Caribbean. We have an intrinsic motivation to be at the heart of developing these new digital public goods. And one of them has been LACchain, a blockchain ecosystem, today the largest decentralized blockchain network, public permissioned with the largest number of use cases for real life. for farmers, for people who were excluded from financial services, for health information and vaccination credentials, and all sorts of other uses. So I want to invite anybody who's interested in partnering up with blockchain as a global digital public good to team up with us. And we are, of course, very closely working with the Monetary Authority of Singapore on that, as it is so complementary with APICs and other innovations that have been led by MAS. So, to wrap up, there could be many recommendations and suggestions for the path forward. I will leave you with 3 possible ideas where we could integrate a lot of the recommendations that we heard this morning. One is to actually have a working group that crosses across ASEAN, Africa, Latin America, and the Caribbean, because there is so much in common about the opportunities and also about the constraints and the frictions that we're seeing, in order to together enable Web3 finance for the real world, for people that, particularly those who have been most excluded from the financial system before. Second, an opportunity to share opportunities for investment in interoperable protocols for digital wallets. This is a layer that we're building on top of the Web3, the first layer blockchain network. And thirdly, an investment together in common standards and a common platform for asset tokenization. And why not, once it becomes a closer reality, also digital currencies, digital fiat currencies, and perhaps also CBDCs. So thank you very much for your time and for welcoming me here and being able to put together also this Latin American Caribbean perspective with the rest of Africa, Asia, and the rest of the world. Thank you very much.